What's good, family? Listen, I want you to throw McDonald's stock away. I got 3 restaurant stocks that are truly soaring up the market. I think they might look good in your portfolio. Remember, don't invest in nothing I say. Do your research, do your homework. This is not investment advice. This is just me. I call this edutainment, right? Always do your research, always do your homework before you get into anything. And, you know, prices may vary a little bit based on by the time we post this. But listen, I want you to like, I want you to subscribe. I'm gonna show you why McDonald's and 3 other stocks, you can trash them because we got some new growth stocks on the way. It's your boy, the Wall Street Trapper. Let's get to it. All right, family. So we know that McDonald's is the largest restaurant chain, fast food chain in the game. Nobody sells more Big Macs or burgers than McDonald's. Now, here's what you didn't know. The Big Mac is the #1 thing that McDonald's sell, and the fries are the #2 thing that McDonald's sells. Fries is their second best-selling thing. I'm coming to think about it. Is there anything better than some golden McDonald's fries? Even though we know it's poison. God damn McDonald's. All right, let's get to it, man. All right, so I'm gonna give you 3 of these consumer stocks. So based on some earnings that we heard came out a week ago, I really was watching this and like paying attention, like, damn, like, this makes sense, like, right quick. So, but I'm gonna also give you 3 stocks that I think are essentially better. And I like growth. I know a lot of people consider themselves like value investors and going the Warren Buffett route, right? And I love it. I love the idea of the principles that Warren Buffett has set in place for us, but I also want us to grow because the knowledge is supposed to evolve with each generation. So the first stock we're gonna talk about is, again, McDonald's. We're gonna trash McDonald's. Right, again, McDonald's is down about 16% year to date. Last earnings calls, they did miss earnings for the first time since Q1 2021. Revenue was also down, and McDonald's said that their consumers who are making $50,000 or less are being impacted the most. That is their core audience, and if core audience is being impacted, of course, revenue is gonna go down. Next on the list, I wanna talk about Yum Brands. Now, Yum Brands is up 5% year to date, but they also miss earnings. They also miss guidance. The company owns Pizza Hut, KFC, Taco Bell, right? They miss earnings, they miss guidance, and they miss revenue, gave weak guidance. Now, in case you don't know what guidance is after the company reports earnings, here's what we look forward to for the rest of the year or the next quarter, right? And remember, I always say that the market is a forward-looking mechanism, meaning the results we getting from today are the reaction we get today are results from yesterday, but the results for tomorrow or the future can actually make the stock soar based on future expectations. All right, and lastly, we got Starbucks. Starbucks is down 20% year to date and growing. Listen, the company slashed 4-year guidance. They miss earnings, they miss revenue badly. The stock dropped about 11%. It is down 20% year to date. I'm gonna be honest with you. I think Starbucks has the perfect business model with luxury coffee, luxury lattes, right? I love the way I always said they're a bank that sells coffee. I enjoy that about them. I just think that management isn't doing the best job with this brand. And because of that, the brand is just feeling it. Like, I don't understand how there are people who are literally can't live without their Starbucks. Right? Like, that brand is a thing. I think management just has to do a better job at those coffees. And now, I will say this, a great company has pricing power. I do feel that Starbucks has the pricing power, but I don't think they read the temperature. You know, charging $9, $10, $12, $15. I think they can maybe cut down on some of the things on the menu. Focus on a couple more things, but again, you know, and then there's these geopolitical things going on with Starbucks that I don't even want to get into because I don't want to fight that battle. But I also think that also, because you got so many people putting on strikes because of what they're doing overseas, I think that is also affecting the brand heavily. But I also just think the bigger picture is that management's just not handling their business. And then them coming on board with that was just horrible. But check this out. I think you should get rid of them. I think these I know most of y'all gonna be in it for the dividend. And you like, Trap, I like the dividend. Trap, I like the dividend. Trap, that company ain't going nowhere. I don't like that. A company is not going anywhere. It's not a reason for you to make the investment in the company. So let's get to it. Number one on my list, CMG, Chipotle, right? The stock is up 40% year to date. The stock also has a 50-to-1 stock split coming up June 21st. Look at this. They beat earnings, they beat revenue, they increased foot traffic by 5%. Listen, and they gave strong full year guidance, meaning, look, here's what we doing. Here's what we gonna do. They saying their online orders has picked up a lot. They're strategically adding more locations. They understand who their consumer is, and they feel like because the world is becoming more health conscious, they are catering to their people. Now, y'all all know I got a Chipotle in 2019, 2020 at $4.25. You know, I've been saying that I own 100 shares of it, so that 50-to-1 stock split gonna go crazy for me. Right, which means you're gonna get 49 additional shares for every one stock that you own. So I'm excited about that. This is my number one. I love Chipotle. Next on the list is none other than, watch this. Y'all ain't gonna like this. Wingstop by my dog, Rose. Listen, Wingstop right now is up 49%. And Wingstop, watch this, revenue up by 7.2%. Profit is up 27%, up to $146 million. Listen, they are consistently growing this brand. They gave strong full year guidance, and you know they got into the thigh. So not just selling wings, they got the thighs. Some of us like the thigh. I think that's white meat. Is the thigh white meat? I don't know. Chad, you know what the hell you talking about? I'm just joking, y'all. All right, so I like Wingstop. The brand is consistently growing. Strategically putting out, you know, Ross got some locations as well. So I think they leverage that, right? I think they leverage celebrity. I think they leverage, I'm not gonna lie. I'm gonna go do my research on this. They might be actually outperforming Popeyes and KFC. I'm gonna go do my research on that. Let me get back to y'all on that. Because I know right now Chick-fil-A has overtaken McDonald's as the number one fast food chain. Chick-fil-A has taken McDonald's. Let me know in the chat right quick, if Chick-fil-A ever went public, would you buy Chick-fil-A stock? B, would you buy Chick-fil-A stock? Biz, though you don't eat chicken?
Possibly, but I wonder if that's gonna change because, you know, they're changing that antibiotic.
Chick-fil-A said no antibiotic. We not. Ooh, you're right about that, B. All right, and then next on the list is, watch this, y'all. This is a Sweetgreen. Now, watch this. This stock right now is up right at 185%. Watch it. They gave strong guidance. They gave strong revenue. Now, watch this. They did lose. They did come in at minus 23 cents per share, which was better than last year at minus 30 cents a share. So they growing, they're trying to get the profitability. Watch this though. I mean, that was on earnings. Revenue, that was on earnings per share. So earnings per share were minus 23 cents a share. Last year it was minus 30 cents a share, so they did better. Revenue is up 26%, 157 million. Same store sales are up 5%, and they grew that better than the 3.7% expected by Wall Street, which means same store sales are growing, people coming in, foot traffic, that's growing. Revenue is growing, and they are working toward profitability. In 1 year, they went from minus 30 cents a share to minus 23 cents a share. We like that. But most importantly, they gave full year guidance, a ramp up, right? So they had estimated $650 million full year guidance by the end of the year. They ramped that up to $660 million to $675 million, and that is Sweetgreen. We like that. But I cannot mention these three without mentioning Kava. Kava right now is up 78% year to date, and this stock is just running. Now, a lot of people feel like this is going to be the next Chipotle. I don't know how I feel about that. Is the company doing well right now? It is. I just need to see more guidance. But I think we need to stop saying something's going to be the next Chipotle. I think we need to let it be what it's going to be. Like, let Amazon be Amazon. There is no next Amazon. Let Tesla be Tesla. There is no next Tesla. It's a great company coming, right? I think that this company will be great. I just want to see it. I don't want to. Chipotle has put in the work. Chipotle has put in the work, has consistently showed us they're a brand that got up to a $3,000, $3,100 stock price. Anybody can't do that. Right now, mind you, in 2016, McDonald's sold off its stake in Chipotle, which allowed it to be a separate brand. So I think we should just let Kava be what it's gonna do. Let Chipotle do what it's gonna do. So let's just rock out like that, man. But let me know in the chat how you feel about that. I wanna cancel out the McDonald's. I wanna cancel out the Yum Brands. I wanna cancel out the Starbucks, man. And I would rather you go for growth. Wingstop, Sweetgreen, CMG, Kava. Now, I know people like, well, Trap, you say only invest in a few stocks. Every week you give us some more stocks. I'm not telling you to invest in none of these stocks. My goal is to help you understand how to play the game. Just highlight some dope companies that you might be interested in. Some of the things I may look at, some of the things I may see. But my goal is to help you be a better investor, help you understand the game a little bit better, and make building out a portfolio and creating legacy better for you so you can build it out one share at a time. Let me know how you like this. Comment in the chat below. We taking listen, some videos that you may want. We not here to be selfish to see what I want. I want to help you. So tell us in the chat some topics that you want to hear about. Also know that's not me. It's somebody coming to chat and talking to you about Bitcoin. They got the name Wallstreet Trapper. They say they want to help you trade. That ain't me. It is not me. Right, so don't fall for that. But also, man, get your apparel, certified Wallstreet Trapper. Make sure you tap into Trappers Anonymous or the Patreon. But last but not least, download the Trapping Tools on all podcast platforms. And definitely go to the Wall Street Looks Like Us Now network. Check it out, man. It's your boy, the Wallstreet Trapper. Salute.